Hello, people. Welcome back. What's up? So, we'll again continue with the same chapter 14 what we were doing. I hope you guys are understanding. Go through. If not, please ask questions. Okay. So, the next topics are independence of an internal auditor. Now, obviously, what are we seeing that tomorrow, whenever we are appointing an internal auditor, it is very much important for us that our independent auditor is definitely free from any of biasness. We want him to give as much as a fair opinion as possible. That is what we expect from our internal auditor. Agreed? So the same thing we are seeing here. Whenever we appoint an auditor, we expect him to be as independent as possible. If at all the moment he is dependent on what is going to happen, as we have already seen in the different types of threats which we have seen in the earlier chapters. Now the same thing will also come into picture here. Now what is that, sir? uh, Whenever an independent auditor is appointed, imagine if now let us imagine we saw now an independent auditor can be either an employee of the company or he can be an external person, correct? Compared to these two people, you only try to think who will be more independent and who will be more objective driven amongst a employee and a outsider. Obviously, right, whenever you're an employee, you are meant to act as per the timings of the company, as per the rules and regulations of the company. Everything will be according to what the company says, right? Whereas when I speak from an outsider's point of view, definitely the degree of control or the degree of independence this person enjoys will be definitely more than what an internal auditor will enjoy. Correct? That fact you will agree? Yes. And so this is what they're telling you. It is always best for you to keep your independence as high as possible. As an organization also, you need to try the maximum to create this maximum independence to the auditor in however way you want. One of the way you can create a very good independence, or how can you make this internal audit more objective oriented, is that you can tell the internal auditor to directly come and report to the highest authorities in the company. Imagine the board, or imagine directly the audit committee. Instead of keeping the hierarchy very low, meaning I'll tell a internal auditor, if you have any problem, you go and report it to that lower level management. Now what happens, people? I know that lower level management does not have any power. So what is that I am enjoying here being an internal auditor? So try to keep the reporting authorities high so that whenever he sees something, he can also add value, he can correct, he can rectify the mistakes if there is any. That is what is given here. See here. The independence means ensuring the possibility of objective performance of an internal auditor's duties and is linked to organizational positioning of internal auditor. Reporting relationship with the board and audit committee or other governing bodies separated from the management authority for evaluation of information reports and the like. So whom you are reporting to, that will have a lot of significance. Is it board, or is it audit, or is it some random person? Yeah. See, internal auditing being an independent objective assurance and consulting activity designed to add value and improve an organization's operation. The concept of independence is equally relevant for the internal auditor because it is an objective assurance. If I am not independent, then obviously the output, how can you trust the output? It will not help you the purpose. Next one, as mentioned above, under the statutory provisions of Companies Act, internal auditor may or may not be an employee of the company, but he evaluates the functioning of the management at different levels. Therefore, to be efficient and effective, the internal auditor must have adequate independence. If at all he does not have an adequate independence, then his work will not be efficient, his work will not be obviously effective. Next one, it may be noted that by its nature, the internal audit function cannot be expected to have same degree of independence as is essential when the external auditor expresses his opinion on the financial information. See, what a beautiful statement. What are they trying to tell you? When compared to, imagine there are two people, one is an internal auditor and one is an external auditor. Whatever is the external auditor's opinion on the financial information, or his opinion on any other saying, how much ever will be the the degree of independence that this person has, external auditor, you cannot expect that level of degree of independence in the work of internal auditor. So when compared to these two people, obviously the external auditor will always have the I can say he would outweigh internal auditor any day. Yes. So remember, when you're trying to remember this one point. That is, to be effective and efficient, it has to be independent. Second one, people, this one. It cannot be expected to have same. You cannot expect that. It will not happen also. When between internal and external auditor, always an external auditor will enjoy a degree of higher control and independence. That's what they're telling you. To ensure his independence, he is made responsible directly to the board through audit committee. Such a channel of communication provides an independent mode whereby an internal auditor can communicate and share his views on the scope of internal audit findings. If internal auditor is made subordinate to low-level management, his independence will be affected, which will affect his functioning and effectiveness. Remember, this will be the third point. Whenever you're made as a subordinate to a lower level management, you're not reporting here, you're reporting here. What you tell here, the understanding skills, the action taking abilities, everything will be different, right? So it is always for an internal auditor to be at maximum potential. You need to make sure that an internal auditor comes below the board or audit committee and not in any other low level of management. And see, an outsider like a chartered accountant, CS, or a firm of chartered accountants or a firm of CS, if acting as an internal auditor, is likely to be more independent than an employee of the organization. So when compared to a firm doing or an employee doing, obviously the firm will be a little more independent when compared to an employee doing. Correct? Sir, now what are the following factors? What are the factors that is impairing the independence of the independent auditor? What do you mean by impairing means, people? Pairing means coming together. Impairing means separating. So what are the factors that will impair the internal auditor's independence? The first one, people, is the business relationship. What is that, sir? Now imagine, people, I'm earning some money from you through some other thing. Imagine I'm also involved in your accounts. I'm also doing some other business in your company. Or not me. Imagine my wife works for your company. My brother works in your company. Don't you think I have some affiliation with you? There is already a business relationship. Obviously, do you think the reports I give will be genuine? Do you think it will be genuine? The answer is no. That's what they're telling you. It involves common commercial or financial interest between the auditor and the client. Example, see, this shall create self-interest or advocacy threats towards audit independence. Therefore, the business relationship shall be restricted as much as possible. Let's take an example. Wife of auditor is a supplier of the client. Obviously, now there is a benefit. Will I be true in my job? I might not be. Correct? That's what they're trying to tell you. Next one, sir. What is that? Employment with audit client. What is employment with audit client, sir? Simple, people. Any kind of employment relationship with the auditee client gives the impression that the audit is not performed independently. Such relationships create self-review threats, familiarity threats, intimidation threats. Meaning, people, I'm working for you. I'm not a consultant. Imagine I'm an internal employee and you have hired me only as a internal auditor. Can happen now. Now, obviously, when compared to others, mine will be definitely, you would have seen all this, Noda. Review threats. What is review threat? Self-review threat. Whatever is the work I did, I might only have to check. Will I be true? The answer might be no. Yes. And familiarity threat. What is familiarity threat? I'm getting to know about you. I've known you for 8 years. Do you really think I will do justice for my role? Third one, intimidation threat. What is intimidation? Fear. What if I do not give this report? What will happen to my job? All that will come into picture. So I might not be able to give a good, service here. Next one, prior work with audit client. It can come under familiarity threat also, right? What is prior work? Meaning I've known this client for a very long time. I've already worked with you. We already have an association. People, the difference here, see, here I have a business relationship, meaning I'm not an internal employee. Business means what? That's what they say. No, imagine my wife is a contractor for you. She has done your architectural designs. Imagine she has supplied some raw materials to you. Or say for example, the next one, it says employment with audit client. I am an internal auditor. I am not an outsourced person. I am working for the company. I am an employee. Yeah. And the third one is prior work. I had worked sometime. I've known you for a very long time. Will I really point out anything against you? No. Next one. Obviously, macha. Gift is nothing but people. Gift is nothing but a very sweet way of telling it's a bribe. Imagine that is there any person who wouldn't fall for a gift? Imagine, is there any person who wouldn't fall for hospitality? Yeah. So hospitality is what? Treating you with utmost care and concern. Oh, sir, please come, sir. Hospitality, anyone will fall for you. So if at all any such thing has been received, obviously it creates a threat. You wouldn't do your best. Yes. Next one, sir. Family and personal relationship. Meaning what, sir? Same thing. Imagine my known person is working with you, or my director is, my brother only. Yeah. There may exist family and personal relationships between member and audit team and the audit client. This creates self-interest and familiarity threats towards the audit independence. Imagine my brother only is there. Will I go against him? Yes. Unfortunately, why? Because when you are appointing an internal auditor, it does not say, right, who can be, who cannot be and all. Unlike an external auditor. Yeah. Next one, non-audit services to audit clients. What do you mean by that, sir? Offering non-audit services to audit clients creates self-review threat. If you remember that we had already seen this threats and all. What is self-review threat? Non-audit services means people, I have only given some services to you, which is not related under this. Now, it has been so happen that I am only coming and checking that. Imagine people some long time back, imagine this material I only had made and had simply published it for some other author, imagine. Or for some other teacher, I only had made it. Now what is happening? The teacher comes after some 3-4 years. Now Arivu is teaching, the teacher is coming and teaching in ArivuPro, and ArivuPro tells me, can you check this material? So it's like my material I only prepared and I had given it to that particular teacher. Do you really think I will point mistakes on this material? Obviously no. I'll say, sir, best is our students just love it. Correct? So obviously, right? So one of the biggest business failures that we had seen in one of the another case study they have given us called people. It's called Toshiba. I believe you guys have heard of Toshiba. Toshiba is a Japanese company, which was they entered into this TV market, then came into all this hardware. All the monitors and all came. They started entering into consumer appliances. So all this was ventured by Toshiba. In Toshiba also, people, three main things happened. Something similar to, if you remember, I told you Wells Fargo, where there was a huge pressure from the senior management that you need to meet the targets. The employees could not say no. So employees started creating fake invoices. There was, escalation of their revenue, which was not existing. It so happened, people, in the year 2009 to 2014-15, the company has created a fake invoices and they have escalated their revenue close to $1.2 billion. How much is $1.2 billion? 1 billion is 100 crore. 1.2 billion, 120 crore. 120 crore dollar it is. It will come to somewhere around 10,000 crore. That amount they have inflated, which never existed. Why? Because so much of pressure in the company on the employees. You have to meet the targets. They could not go against the senior management. Whatever they say is the word. And very poor audit committee. In fact, I don't know if you guys remember your Companies Act or not. Audit Committee of Companies Act says the majority of the audit committee should be financially literate. And if you remember LODR, according to LODR, audit committee composition says that all the members of audit committee shall be financially literate and at least one shall be a financial expert. See, things like this is what will have an influence. In this committee, not even one person in the audit committee had financial literacy, meaning they did not understand anything with regards to financials. Then how will you catch hold of some irregularities? Again, a second drawback that happened, and a very, very weak internal audit. These three are the main. There were many other failures also, but these three are the main three failures that took place in the company. One is weak internal audit. Next one is audit committee fit for nothing. That they did not had financial literates that were there in audit committee at all. And third one, over pressure on employees, which they could not go against the management. They inflated the sales. They showed revenue which never existed. They inflated the numbers, up to $1.2 billion. And finally, the bubble burst. The shares fell. Yes, Toshiba faced a lot of issue with regards to this particular matter. I've also highlighted these three things for you. One is internal audit. One is audit committee. And next one is corporate culture, where employees could not act contrary to the intent of their suppliers. Whatever they say, they have to do that only. So failure of all this, Toshiba just had to face whatever they faced. Yes, so they gave you that one particular case. So remember. Next one, sir. Okay. Next one. They're telling you internal audit techniques. Whenever we are doing internal audit, then what are the techniques that will be used? Again, a direct question only they will ask you. What are the internal audit techniques? An internal auditor uses internal audit tools or techniques to ensure that controls, processes, and policies are adequate and effective, and that they adhere to industry practices and regulatory mandates. So he uses these techniques, or you can call it as tools, to say yes, they are doing everything fine. The techniques which are often used by internal auditors are first one, review of operating environment. What is review of operating environment, people? I'll get to know about the company, what the company is doing, what the company is into, and what are the number of employees, who are there, what is whose role. So that's the first thing I try to do. What is that? For carrying out the audit effectively, it is necessary for an internal auditor to understand how the company operates. He determines it by referring to, how will I get this information? How will I get to know how my company is operating? How? First one, I'll talk to departmental employees. I'll go to each department. I'll talk to the senior management there. Next one, I'll talk to the external auditors. I'll speak to them. I'll ask them for their reports. Internal auditors, secretarial auditors, statutory auditors, because someone or the other would have pointed out something or the other thing, right? So it will act as a data for me. Third one, people, risk specialists, meaning if at all you have got any risk assessments, risk management committees are there, these evaluations keep happening. If such things has happened, then bring that data to me. So you will consider all of that. You will get a fair idea on what the company is doing and their operational environment. Next one, sir. A firm's operating environment describes management's ethical qualities, leadership style, and business practices. An internal auditor also could determine how a corporation operates by evaluating industry trends and regulations. Meaning, sir, by doing all of those, people, I'll get to know a fair idea on whether you guys are ethical. Because imagine all these three cases. Employees will say, no, sir, they do not make payments on time. Imagine employees will say that, sir, we have not received our bonus on time. Imagine, sir, there is no, say, for example, leaves. The leave policy is not right. See, external auditors, they say that the reports are not fine. They have made the constant non-compliances. I will get to know what is the, I have said that the independent auditor did not meet the independence criteria. Then, so this will give you an insight. Yes. Next one, review controls. What is reviewing controls? Are nothing but, people, whatever each departments that are there in the company, I'm going to review each and every control they have. What does reviewing control means? Nothing but your internal controls. And how will I review that? I will apply, people, the generally accepted auditing standards, the GAS. I will apply. It's nothing but the principles that the auditors will apply while auditing. There's internal audit and all. So I will apply these auditing principles and I'll try to see, I'll review the controlling mechanism that the companies have for every department. Sir, once I do that, people, once I do that, what I have to do? Now I have to test the controls. Meaning I've reviewed the controls now, whether this particular department has these controls or not. So regarding this in detail, I'll tell you in the next topic. I'll explain you with example also. Yeah. So next what I will do, I will test those controls. Meaning, see, here I've said whether controls are there or not. I got to know, okay, 3 controls are there. Here I'm doing what? I'm doing nothing but testing the controls. What am I doing? Nothing but people, I'm taking up a sample audit. That's what it's no. See, controls are mechanisms and methodologies a corporation's management puts into place to prevent losses due to error, fraud, theft, or breaks in technology system. That's nothing but internal control. Effective controls remedy deficiencies and problems properly. So now what I will do, now I'll make sure that I will try to see what and all are the deficiencies. I will give a feedback. These are the things you need to improve. So I'll check into that as well. The last one, sir, account details. What is accounts, sir? Nothing but people. I'll also check something of your financial statements. I will check whether there are any material misstatements that the company has done. How? Again, by doing your substantive test audit. What is that? Again, I'll check a random items. I'll pull it. I'll get to know whether there is any error. If there is error, I'll get to know whether it is intentional, non-intentional. Intentional means fraud will apply. And I'll check why there was an error. That means there is a weakness in the system which I should have detected here. So I have to advise the company there has been this error. That means the internal controls are not adequate. You need to implement more and more internal controls there. Correct? So sir, 4 techniques I do, sir. First one, people, is reviewing of operating environment. Next one, reviewing the control. Next one is testing of control. The fourth one is account details. Nothing but checking your financial information. So these are what people, these are the, what is that? The techniques of internal audit. Remember that. Yes. Next one, sir. Internal audit process stepwise approach. So I told you, you have seen all the techniques and all. Now we will see how to put all of this into practice. Now, sir, one second. Sir, step 1. Now, internal audit process stepwise approach. How are we going to do the internal audit, sir? So they have given you only this. I've tried to give you a little explanation and an example for the entire approach. Let us try to understand that. See here. Step 1, internal audit. How does it happen? Stepwise. First one, people, establish and communicate the scope and objective. So before the audit begins, what do we do, people? I need to come and clearly tell what are the areas that I'm going to review. Now see here. Before the audit begins, the internal audit team must define what areas of business will be reviewed and what they hope to achieve. I clearly will tell people, you know what, I'm going to review this. Say, for example, your manufacturing process, your marketing, your, say, for example, purchase orders. I'm going to review them and I'll tell them what I want to achieve, outcome, what will be the outcome. So I'll prepare the management. This is what I'm going to do. This is what you can expect. Getting the point? See here. For example, ABC manufacturing, the audit scope could be focused on procurement process, buying raw materials, specifically how suppliers are selected. So I'm buying raw materials. How did I select that supplier? Next one, payments are processed. How are we making the payments? What if there are double payments that may happen? The objective might be to ensure that procurement process is efficient, cost effective and free from fraud. So he's not any of the persons whom you know. You got some gifts or benefits, so that's why you selected him. What if that supplier has gifted our procurement manager something so that we have to give him order to him only? Even though I'm telling people, most of the cases that will only will happen. 60%, 70% of the cases. I tell you best example, people. Doctors. Why does a doctor prescribe you a specific company's medicine? See, I'll tell you one thing. According to me or my knowledge, people, it is always advisable. And I've spoken to few people. A doctor is always, I might be 100% wrong. Of course, there are so many doctors who are doing this exactly, properly also. But I see a few doctors, they write you one medicine. That medicine you will not get anywhere. but you check it in their pharmacy or a pharmacy nearby that particular clinic, you will get that. But once you come away some half a kilometer from the clinic, you will not get that medicine. Why? Because the pharmaceutical companies will pay a huge money for the doctors for you to recommend this medicine. See, imagine if a doctor tells you to take paracetamol, that is good for your fever. But no, the doctor will tell you to take Dolo. Dolo is a company. I've just given you a very basic example. In COVID, even there's also it happened. It seems they had done it, but I'm not sure. I did not go through, so I'll not comment more on it. Okay, the audit team communicates to the management that the objective is to evaluate the effectiveness of supplier selection, contract management, payment processing. So I will tell this is what we are trying to achieve. Okay, next one. That's our first step. Develop an understanding of the business area. So now I'll try to understand the business area stepwise. The audit team needs to understand how will we do. We'll talk to people. We'll go through the documents. I will speak to people. I'll observe people. Yeah. Key activities within the area being audited. This involves reviewing documentation, conducting interviews with staff, observing operations. So developing an understanding of the business area. How do they do? Now I want to select this procurement and payments. Correct? Now see. The auditor review the procurement policies. I'll go through all the documents. Why did we select them? And take all quotations. Ask them, did you take quotation from anyone else? Ask the quotation. If you don't have quotation, very clear. That's the first site. There is something wrong. Interview the procurement manager and staff and observe how supplier contracts are awarded and managed. How are you doing it? They may create flowcharts to map out the procurement process from supplier selection to payment. Now, after speaking to them, come up with a flow chart. How did you select? How frequently do you place an order? How will the checking be done? How will the payment be done? Create a flow chart so that it will be understandable for the management to easily know, okay, this is what is happening in the ground level. Next one. Describe the key risks. Now, after going through all this, what I'll do, sir, I got to know here you guys are screwed up. It's done because you guys are not following a proper mechanism here. See here, example. Key risks involves understanding what could go wrong in the process under review. So, whatever we are checking, so in that, what is the thing that can go wrong? Imagine my first question, how did you select the supplier? I told you, ask for bids. If that is not there, then it's gone. Risk is there. So you are selecting a random person. In procurement, risks might include supplier fraud. Next one, see, overpayment for materials. How are you checking? Or receiving substandard goods. Sir, he has sent us goods, but what we agreed was grade 1, but what he has supplied is grade 3. Will you check that goods every time? Or now you went and you observed, you got to know the business area. When the material came, did anyone check the quality? So these are all coming under your purview. You're going to check and you let them know. So describe the key risk. Next one, people. Identify the control procedures. Meaning, sir, in the company, what and all are the controls that are in place, internal controls. For example, imagine there is double checking. The company, the procurement management or procurement manager, he issues a purchase order, but he does not make the payment. So maker checker, there are two different people. Now I get to know, okay, sir, there is a multiple check happening. He says they need 12 lakh worth inventory, and the checker who receives it, he says, okay, 12 lakh worth goods are there, and the payment department makes the payment. So don't you think it's a 3-step strategy? So now I can believe, yes, everything is going good. Now this is the internal control. You will check that. For each risk, the auditors look for the steps the company has put in place to prevent those problems. So if you have identified it, then you would have inserted an internal control. Okay, next one. Develop and execute a risk-based sampling and testing approach. Meaning what, sir? Now see here. The audit team develops a plan to test the effectiveness of the control. Now control is there. Now whether is it working properly, you put it into use, no. This usually involves sampling transactions to ensure the controls are working as intended. For example, my senior used to do, when we were in our company, we used to get random calls from clients. usually to check, my senior used to make sure that used to happen. He calls us from different numbers and checks how keen are you to take up this client. When a client calls you, how will you behave? Yeah, this is what, it's nothing but what it is, your testing approach, right? Now when I get a call, whether I'll be interested in speaking, I'll just cut the call, or how will I do? So I'll just try to check. He used to call. That's what they're telling you. Try to do that. The audit team develops a plan to test the effectiveness of the control. This usually involves sampling transactions to ensure the controls are working as intended. So sampling, take out 50, take out 10, take out 5 records and check. Step 6, report issues and negotiate action plan. Now once you did the test, you would have got to know that, okay, there are errors in this field and this field. So identify them and also give them an action plan. This is what you need to do. Make sure that this is, now as I told you, imagine there has been double payment they have made in one period. To avoid that, you can come up with three-way matching. What is three-way? A person who issues an order, a person who checks, and a person who makes the payment. All three are different. So in that way, you're trying to give a suggestion. There is a risk here, this is a solution. Last one, sir, follow up on reported findings. Meaning I've told you to implement this three-way, correction or three-way matching mechanism. Has the company really implemented it? That's my last step. I'll just come and check whether whatever I'm telling is the company even implementing them. That's only called as follow-up. Follow up on reported findings. I've already told you. Have you corrected it? If not, then why should I do it? Correct? That's what is given here. Clear, all of you? Okay. So that is what is given in the internal audit process. So it's very simple. But I've tried to give you by heading and I've tried to give you by example. Yeah. Clear? Okay. So in short, if I have to tell you, you will first try to establish communication, and basically you'll try to understand about the management, and you will try to tell what is that you're trying to achieve. So establish and communicate the scope and objective. That's the first step. Second step, people, develop an understanding of the business area. Try to understand, speak, interviews, documentations, everything. Describe the key risks. So try to identify the key risks. Now in that, identify whether there are internal controls. If it is there, now try to make sure, test those internal controls. When you're testing, if you get to know that there is something which is not proper, then report the issues and negotiate action plan. Give a solution also and ask them whether they have implemented the solution or not. Clear? I hope you're understanding that. Hey, clear? Next one, sir, evaluation of internal audit function by an auditor. Evaluation of internal audit function by an auditor. Okay, for this also I've tried to give you people, I want you to tell me literally I've broken my head to do this, the dive deeper. See, summary charts also, wherever the procedure is lengthy, I've tried to put. Now there are 7 steps. If I put the 7 steps only, it will become the same 7 steps. It's already crisp. So to remember them, I've tried to put a logical reason behind it so that you guys can hook on it. Now, when I say the internal audit step-by-step process for you, that procurement manager example should just sit. That's how you achieve the professional excellence in the subject. Getting the point, Hey. Okay. Evaluation of internal audit function by an auditor. Now, what is this, sir? Sir, first of all, we are telling all this that an internal auditor should do. Now, my question is, what is the guarantee whether this internal auditor is doing his job properly or not? So remember, people, whenever a secretarial audit happens, a secretarial auditor's role is also to check the effectiveness of the internal audit. He will also tell whether internal audit is happening properly, whether he is competitive, he is qualified enough, he is a good person, he is testing things properly. Our secretarial auditor appointed will come and check it. That's what is the next topic. Evaluation of internal audit function by an auditor. We are evaluating it. Now see what you will do. Sir, first one, organizational structure. Now what is this organizational structure, sir? The first thing whatever we discussed today. How independent is your job? Are you reporting to the lower management or are you reporting to the higher management? If at all you are reporting to the lower level management, then people, the organizational structure is not right. Then you have not given them sufficient independence. Lower the independence, lower the output, higher the independence. Clear? Yes, sir. The auditor evaluates whether the internal audit is done by internal team or external agency. So we will say whether it is internally done by an employee or by external firm. Ideally, the internal auditor should report to the highest level and be free from operational responsibilities, ensuring independence. The auditor checks if any restrictions are placed on the internal auditor's work and if they are communicated freely with the external auditor. If a company's internal audit team reports directly to CEO without interface, this indicates high level of independence. Clear? So I will come and report in my secretarial audit. In this company, the internal audit is at its highest independence. You can trust their reports. Getting that what a secretarial auditor is doing here? Okay. Next one, scope of audit functions. Now what is this, sir? Now see here. The auditor assesses what areas the internal audit covers. Scope. Scope is what? What and all an internal auditor has checked. So that for a reporter or for a person who reads the report, it is very clean that, okay, these things are what internal auditor has checked. I can be rest assured. And how deeply they examine those areas, I will check. It's also important to know if management acts on internal auditor's recommendation. Are they taking the word seriously? Who? The management. So I will report all of this in my scope of audit function. What and all he checked, how deeply did he check, and is the management serious about it? Third one, technical competence. What is technical competence? Whether this person is having proper qualification and experience. Imagine this one thing, if at all it is done by an external person, imagine a CA takes it up, or imagine a CS takes it up, or a cost accountant takes it up, or any other person takes it up. Don't you think there will be a technical competency will be different? That's what they're telling you. I will comment upon his technical competence that can include his background, educational experience, everything. So that reliable, no? So if at all the source is reliable, then the information is also reliable. Next one, due professional care. Meaning, sir, how was this person with his work? Negligent or was he really professional? Has he checked everything? Was his planning or was his audit well planned? Did he cover everything? Did he supervise everything properly? Or did he just give it to his team and wash his hands? I will check all of that. Due professional care. Yeah. Next one, monitoring of internal control. So obviously, everything boils down to internal control. Internal auditor checks internal control, whether the internal control is effective or not. So if he says the internal auditor has checked the internal control, and if I say the internal auditor has checked the internal control properly, that means the people can be rest assured whatever are the internal controls in the company, that means they are free from frauds. There are no errors. I can rely on it. Yes, sir. It's like audit ka audit. Yeah. Next one. See, monitoring of internal control. Examples here. If the internal audit team regularly reviews internal control and they have suggested improvements also. See, internal control we said, right, you have to implement the system 3-way. Now, imagine if the company in its board's report or in its annual report, they say that internal auditor has suggested a 3-way, monitoring system for procurement, and the company has also implemented it. We will also know internal control has been done. The company is also serious on what the internal auditor is being done. That means what? For a matter that particular area is fixed. That's what they're telling you. If these are implemented, it shows effective monitoring. Okay. Examination of financial and operating information. What is, people? Nothing but again, it comes to how effectively are you identifying the financial information, reports, and if at all I have identified that there are some errors, has the company taken that particular thing seriously? Have they acted upon it? Again, financial. Next one, review of operating activities. Now, what is review of operating activities, sir? Now, imagine, people, I'm saying that the company, internal auditor has reported the company is working, probably, underutilization is happening, is what the internal auditor has given. The report says that the company increases its utilization by next 20% by the next year. That says my operating activities had deficiencies. The internal auditor has checked it, and as a secretarial auditor, I can say that the operations are taken care because cost effectiveness is being done. With regards to raw material utilization, someone has already checked it. I will come and say, yes, this area is fixed. He has given a review and the company has fixed it. Next one, review of compliance with laws and regulations. Meaning what, sir? Again, the internal auditor, imagine, comes and says that the company has not filed GST returns on time. The company has not filed provident funds, PFs and pensions on time. And the company has fixed it. Now, what is my role? I'll just come and say there has been some compliance issues and the company has rectified. Who pointed it? Internal auditor pointed it. Now, you can be rest assured that the company's compliances are on track because it has been, someone has even checked it. There has been an error and company has also monitored it. And I can say internal auditor is doing a good job there. Next one, risk management. What is risk management, sir? We have already been seeing that people, imagine if at all I've identified there is a potential fraud, procurement management. I'm giving it to my related party, known party. And if the company has corrected it, that means it has been fixed. So risk assessment, risk management. And the last one, sir, governance. Governance is nothing to do, people. It is nothing but the company's overall hierarchy and the management. How is the company's top board? And how are the ethics in the company, and how is the communication channel, and how is the overall board, the entire thing. Can I say corporate governance? So with regards to the board, is everything right? If internal auditor has checked it, if there is anything that has coming as corrections, has he told? If yes, then that's nothing, nothing more we expect. That means that area is fixed. Yes. So reporting and role of internal auditor. Okay, we'll do one thing. This topics we'll cover in the next video. Till here, just read, just quickly go through, and if you guys have any doubt, do ask. Yes, people, thank you so much.